no cure for. I think I love you. Isn't that what life is made of? That ain't the one I want. That's the one I want. Well, blah, Julie Godel. Alright, so. Oh, come on. Phone's not turning on. There it is. La, 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 la. Start streaming. Just don't stop screaming, screaming, and streaming. Hey, how are you guys over there? Nope. Entertainment. That's entertainment. Something's not working. And we are good to go. Alrighty, look who's showing up. Peter's here. Iowa. Iowa? Woohoo! Dave 99 is back in the house. Dave, what's happening? Inspire me more. How are you? Back again. Just getting the night started. Paramount may have another deal. Cool beans. Macy's took another 1-point dive Monday. All right. Inspire me. How you doing? Time to roll out the calls. All right. Let's get the ball rolling. It is Tuesday, July 2nd, 2024. Ooh, this year is dropping down quick. So, let's see what happened this morning, or the positions that jumped up this morning. Dave, hi from Central Illinois. How you doing? I'm doing good. All right. I think I'll start demo trading in like a week-ish once I get the hang of this strategy. Well, we're here. Make sure it works for you. I took in over $100 in premium. Cool beans. Uh-oh. Oh, wait a second. Yep. You get this thing working right. Sorry about that. Still getting the hang of things. By the way, your shirt's backwards. Yeah. Simba, how are ya? So Walgreens is a little lower today. Well, alrighty then. I did pick up another position this morning. I forget what it was. Alrighty. Some comments alive. Alrighty. Dell looks great. Well, Gallant, let's take a gander at Dell, because I do have some. Do I have some Dell? Holy shit. It's not good not remembering these things. Yeah, I do have some Dell. I'll have to re-log on to that one. And re-log on to that one. All right, let's just see where the heck we are and see what we're doing. All right, Dell. D-E-L-L. Dell. Now, hey, Mateo. Chris, I can only buy a whole share in swap. Well, Chris, we got to begin somewhere. You don't think I started out buying hundreds of shares of something Yeah, I started out with just a few. But, Chris, once you learn the concept, once you learn the strategy, it comes relatively easy. Then it slowly grows over time. Mama's in the house. How you doing, Mama? All right, we're just getting started. So first, let me go over some of the disclaimers. Number one, I'm not a professional trader. I'm not a money advisor. I'm not an analyst. I'm not an anything. Wait a second. If I may ask, how much are you trading with? I have 6 different accounts, so I got quite a bit. I wanted to be able to buy partial. I'm starting with 500 bucks. Chris, best thing if you start with 500 bucks. Jimmy, Comcast, CMCSA, gotta love it. CMCSA. Sorry, Chris. You can start off slow with a company like Robinhood or Webull or someplace that allows you to do called fractional shares. Let me show you a quick little strategy. You'll like it. It's really cool. Yeah, look at this. FCX popped up right there. It's not going to work in this example only because the dividend's 2 weeks out, so we really can't figure that one out. Let's find something from June. It helps go through the steps a little bit quicker. All right, find something in June on Warren Buffett's list. All right, Paramount, Hewlett Packard, Occidental Petroleum. All right, Mendeley's. I'm just picking one for the fun of it. All right, Chris. Chris, you ready? This is called dividend capturing. I do it with a twist. Dividend capturing, basically you buy a stock before the EX date just to capture the dividend. Now, I like to do it 2 weeks prior to. Let me quickly show you what I'm talking about. Now, Mendeley's, this one right here, has its dividend on the 28th, which was a couple of days ago. But that's not what I want to show you. What I want to show you here is Mendeley's had a dividend of 42 cents. Now, when I say I like to buy stocks 2 weeks prior to the EX date, okay, 2 weeks prior is right here on the 14th. So, we're going to look at the stock price on the 13th. The 14th, which is 2 weeks prior. Oh, so here we go. Mendeley's, MDLZ. All right, now. The 14th of June. Now, this strategy kinda, hold on a second. I'm at the tail end of this cold, I just don't want to go away. Wow. Sorry, guys. That happens. Maybe I should have laid around doing nothing more often. Went to work today and yesterday. Should have stayed in bed. Sinus infection. Yeah, probably. Walgreens, WBA. We'll take a look at it. Alrighty, so let's take a gander at Mendeley's. Okay, now when I say I like looking at 2 weeks prior to the EX date, now 2 weeks prior to the EX date would be June 14th. Check out the dates. Now, for those of you guys who don't know, all right, for those of you who don't know, this screen here is live on YouTube. It will allow you to see the small numbers. a lot easier because you really can't see them on your phone or your tablet or your portable device. That's why this screen behind me is live on YouTube. Okay, that's 10minutetrader.com. I was supposed to get a sign made up today, and I didn't get around to it. Sorry. All right. 2 weeks prior to is going to be the 14th of June. So here we go to June right here. Here's the 14th right here. Check out the date. The date's in the top left corner. See, right here. 6/14, that's the date we're talking about. All right, so basically, here's a strategy. You ready for this, Jim? Oh, I forgot who I was talking to. I want to buy on the opening price of the day. Opening price of the day. That means first thing in the morning, I want to make an buy opportunity. All right, so the opening price of the day on the 14th of June is $66.10. So if I put my order in first thing in the morning, $66.10, more than likely I'm going to be filled. All right, so what is the dividend? The dividend is 42 cents right there. All right, now let's say hypothetically I buy it first thing in the morning. And once I get it filled, this will be filled right around this price here. So I'm going to take the opening price of the day. I'm going to add the dividend, which is 42 cents. You add the two together, and you come to 66.52. 66.52 is our target price. So let's go one day at a time to see how many days it took in order to fill. Now, if we're looking, Mendeley's on the 14th, okay, we buy it first thing in the morning. We add whatever the dividend is, the 42 cents, and that's our exit price. And how long does it take to get to that? The very next day. Remember, we're looking for an exit of, what is it, 62? All right. $66.52. That's my exit, 66.52. Yeah, 66. No, wait a minute. Yeah, 66.52. All right, so 66.52. The high, 66.43. Miss it. So that's 2 days. Remember, day one would be the 14th. Okay? The 15th or 17th. Yeah, because that's a Friday. That's Friday. That's Monday. Okay. So 66.52 is the price we're looking for as an exit. 1 day. Okay, it jumped pretty quick, didn't it? I was saying the 14th. Where the freak did the 14th go? Okay, here's the 14th right there. Right, here's the 14th. That's a Friday, Monday, Tuesday. Remember, we're looking for 66.52. Not the second day. Right there, you'd be out on the third day, 66.55. But if you didn't, look at the very next day and the very next day and the very next day. So needless to say, okay, as I was trying to point out, dividend capturing, okay, most stocks go up before the EX date. So 10 days before the EX date would be the entry price and the entry day. Here's the EX date right here, 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, the 14th. Okay, we looked here. The 14th was right here. It was a Friday. Okay, buy at the opening of the opening of the day, right here. So 1, 2, 3, 4, 5. By the 5th day, you're out with your little profit. That's called dividend capturing when you can't buy 100 shares. If you only buy 5, 10, 15, 20, whatever it is, you're capturing the dividend, but not necessarily so. You're capturing the dividend equivalents. Same thing. Now, if I held it going into the dividend date of the 28th, the stocks have a tendency to go down after they pay out their dividend. So I like to jump in 2 weeks before the EX date, which would, like I said, the 14th. By the 19th, I'm out with my profit, then I can look at something else. Just a thought. All right, let's get back on track. I was just trying to help that guy out. What about seasonality and whatnot stuff on for Hershey's? Let's miss some questions. What charts do we look at? Walgreens, we did that one already. All right, so you got that, Chris? All right. Yeah, for a minute there, I thought I lost you. But I'm glad you get it. Okay. Inspired me. Wait, contracts only work for 100 shares increments. Yeah, inspiring me. I wasn't talking about a dividend capture. What do you call it? Yeah, I wasn't talking about dividend. Oh, wait a minute. I was talking about dividend capture, not covered call. Two different strategies. Dividend capture you can do from one stock all the way up to 1,001. You do odd numbers. You don't have to do 100 for the dividend capture strategy. It's a simple strategy specifically for people who don't have a lot to work with. Your best example would be in my first book, How to Get 10 to 20 Checks Per Month, like clockwork. Gallant. Were you looking at Dell? Yes, we were looking at Dell. Because I do have some Dell. I'm gonna have to open up that account again. All right, I'm gonna open up this account. American Airlines looks good. All right, so something's not working right. All right. American Air, it's Alcoa. Okay, Alcoa, 4083. Now, we looked at Alcoa earlier, I believe last week. 4083, the 41s are going for 48 cents. Yeah, that's over 1%. And you've got to be kidding me. For 2 days? That's freaking awesome. Look at it. 4083. The 41 is going for 48 cents. Let's check out the chart and see what it says, because that looks kind of interesting. That's a nice pick there, Gallant. A year ago, 34.47. MCD and Dow. All right, we'll take a look at MCD and Dow. Alcoa. A year ago, 34.42, bottomed out. What a bottom! Look at that. That looks like a quadruple bottom. Right there, 4 times. Right in the end of October. End of October. 22.97. So that's the bottom. Look where she peaks. Double top right there on the 30th and the 31st. 45.48. So we know where the bottom is and we know where the top is. Well, look at where she's going at the moment. All right, a month ago would be. Ooh, let's look at this chart here for a second before we go to the last 30 days. 39 shoots up, pulls back, shoots up, pulls back, shoots up, pulls back, shoots up. Okay, so you get a little bit of a toss up here. You got a top here, but you have another top over here. Okay, so she could continue to go to the upside because that's basically where she's going. All right, the chart's really not that difficult to read. But let's take a look at the 30 day, because the 30 day, I only see one live on YouTube. And it's not your monitor. Oh. Let's check it out. Gonna go to YouTube real quick and see if they're both working. Intel, INTC, and QCOM, huh, Albert? Okay, my channel. Live. Oh. That's that one. This one's not working. Wait a minute. That one's working because 2 people are there. Why isn't this one working? Okay, well, let's stop it. Let's try starting it again. See if it works then. It says stopping the stream. It's working on it. All right. Glance on Mickey D's and Dow are at 30-day bottoms. Cool. EURN. Never heard of it. EURN. Wow, now that's weird. Just doesn't want to seem to stop. Well, let's see if we can start it up again. Ew, I'm out. Sorry there, dude. Okay, start streaming. Here we go. Manage. I was saying no to MCD and Dow because they are at the bottom. Yeah, I want to take a look at them anyway. But what do I know? That's funny. Okay, hypothetically speaking, that should take care of it. Somebody want to check and see if YouTube is working properly? Come on. Takes a little bit, but what do I know? Intel. All right, Michael, I wrote Intel down. We're going to take a look at Intel in a little bit. Okay, my channel. Live. All right, so I have 2 live at the moment. All right, I can't figure it out. Why is he ignoring me? Jerry Bear. Jerry? What did you say, Jerry? All right, Jerry, I'm not seeing any questions here. I'm not, oh, here we go. I have a pop-up telling me you have a virus. Oh, a virus. Sorry, I'm just going through some of the questions. Try it one more time. I was asking you about what you meant by open. I was asking about what you meant by open. Open what? Regularly open or open early? No, the regular opening, the opening of the day, 9:30 in the morning. Okay, so I do have 2 lives, see? Live and live. So the 2 lives are working on YouTube. All right, so let's get back to where we were. Yeah, I'm not going to do that. Not so everybody can watch. All right. Oh, it's insane how TikTok censors stuff for no apparent reason. Okay. Parkus. Hey, James, don't you take a loss when you buy back the option you don't want to exercise? Not necessarily so. I look at it this way. Now, when it comes to option, what we do, we buy and we sell, but we do it backwards. We sell first, and then we buy back. Well, it's in order to do any trade, you have to have a beginning of a trade and an ending of a trade. So you're opening a trade, and then you're closing the trade, no matter how you look at it. Howdy there, Mike. Hey, PBR has 18% dividends Would that be a good dividend investment if it's been sitting around 14? That's an interesting question. Let's take a look at PBR. PBR. We'll take a gander at it. Don't go anywhere because it's going to take a while because we have like 10 stocks ahead of you. Look at first. Do you have an average amount of stock or dollars amount to limit yourself? No. Can you look at Siri today? Okay, Jessica will put Siri on the list. Let's see what Siri says, but right at this moment in time, do we have the YouTube live? Is the YouTube working live? Somebody want to just, inform me with that one? How many years have you consistently earned 1% per week? Well, over 15. Is it good if you get $60 in dividend from NAT? Well, all dividends are good. Gallant, good, it's working. All right, I'll check. Can you look at Tesla? I don't look at Tesla at all. Only dividend stocks, and Tesla is not a dividend stock. Sorry. Yes, YouTube's working. All right, cool. So YouTube's working. Let's go back to where we were. We're talking about Alcoa AA, the stock AA. All right. Here's what we can buy for first thing Monday morning, first thing tomorrow morning. Now remember, there's no trading on Tuesday, so listen closely to the numbers. Do you have improved these returns over the last 15 years? Sorry, I don't. Sorry, don't have it. That's why we're actually logging everything this year. We just started I just started recently in January to log every single trade. So you can check every single trade because each one is made live. All right? Can you show us how to get Buffett's list and so on the calendar? Oh, Parkus. Yeah. We'll take a look at that a little bit later, not right at the moment, because that's a think or swim, what do you call it? How-to type scenario. It's not what we're talking about at the moment, but we'll take a look at it in a little bit. It's on Google. You have, and you save it. Oh, that's the list. You go to google.com, you go to Warren Buffett's list 2024, and it'll show you the top places to get that list. On dividend capture, is that a share? Yes, the dividend capture, it's by the share. You can go, you can do fractional shares with dividend capture. It's kind of cool. All right, abbreviated trading sessions tomorrow. No trades Thursday and full day Friday. Yep, got that. So covered calls on Tesla. I'm proud, but on pain. Okay. Thank you. You can explain your strategy. I think it will work for me. All right, Michael. Cool. I'm glad it works. I meant the dividend calendar. I will wait. Thanks, James. No more questions. Okay, Parker. Okay, Parkus. Parker, let's do it really quick. It's really not that difficult. All right, what you want to do is go over to your wait list, top left-hand corner. Okay? To the watch list. Okay, top left-hand corner. Onto the watch list. The very next tab over from the watch list allows you to drop down. Okay, watch list here, very next box is a drop down. You click on that drop down and you slide all the way down to where it says create watch list. All right, so you click on create watch list. Up here in this red box, this is where you put whatever name you want to put in there. Dividend Kings, Dividend Aristocrats, Warren Buffett's list, whatever you want to name that a list of particular stocks. Okay, Warren Buffett's list, perfect example. You click right there and you put Old Warren Boy. Okay, that's the name of my stock list, Old Warren Boy. Then you click on Import List. Click on Import List, and now you have a choice to bring it in one symbol at a time, or from a file, or copied from your clipboard. Okay, so to get it onto your clipboard, you just go to google.com and put into the search bar, you put in Warren Buffett's stock list 2024, and then you'll get an email with the stock list from wherever you choose. Cut and paste, copy, and you just drop it in there. And once you do, once you have that list saved, you come over to the calendar. You click, okay, the calendar is up in the market watch, the top line, very top line, okay, over the market watch. The next one, next line down, the very far right, calendar, that will pop up, and this little gear or star or whatever you want to call it, you click on that, and you got drop down pops up, and then you want to hit personal, right? Personal, and then another window will pop up. This is all of your private lists from the watch list when you create a watch list. So I have 100-year-old companies. Okay, that's a list I have of companies that are over 100 years old. Calendar spreads, it's strategy. I'm not going to go over here with you guys. Dividend aristocrats, dividend champions, dividend contenders, dividend kings, ETF holding list, high volume stocks, the old list. It took me years to already create. Warren Buffett's list, weekly ETFs, weekly optional stocks. That's where you find all your lists. You click on any one of those, and it pulls up that list in the calendar. And in the calendar, you can search for dividends, earnings, conference calls, splits, any kind of events happening during that time frame. Okay, that's how you put it into the into the calendar. Where was I? Quick chart. Back to here we go. All right, let's get back on the list. Hey, Austin's here. What broker are you using? What is that? Carlito? Carlito? All right, Carlito. I don't know. It's Carlito? I don't know. It's Think or Swim. Thanks, Gallant. All right, so back to Alcoa so we can finish up this little chat and go on to the next stock. All right, first thing again, after we isolate it in the calendar, it tells us which day we're going to be buying what stock. Okay, first thing I want to see, calendar, when does the stock pop up? Great, well I want to buy it 10 days before that date. Each one of these little green dots represents a stock's EX dividend date. I want to buy it before the dividend date. 10 days specifically. That gives it time for it to move. Once it makes its move, great, I want my 1%. Safe, predictable, consistent, 1% per week. That's what I'm looking for. All right, so that being said, let's finish it up. So, Alcoa, first thing in the morning, 40.83. If I sell out to 41, that's 48 cents. That's over 1%, and it's only for 2 days. That's freaking amazing. I think I'm spent out for this week, though. But look at the chart. Up, down, up, down, up. She should hypothetically continue to go upside. Okay, if I was going to jump in, I'd wait to see where she opens up in the morning. If she opens up to the high side, great, I'm jumping in and taking for the ride up. If she pulls back, well, I'm going to sit and wait for the new bottom. Alcoa is not on the calendar, but put premiums are great for 2 days. Yes, they are. Dell is on the calendar and is good premiums. Yes, Gallant, we already looked at Dell. Didn't we already look at Dell? Come on, I can't be that tired. Here's the last 30 days for Dell. And to let you know, I do own some Dell. Okay, so here we are. She drops, goes up, drops. Come on, it is plain to see. Look at this, last 30 days. Here we are. She drops down here. Here's your 30-day bottom right there. Right, 30-day tops right here. Pulls back again, look, down. Here's a new bottom from that top. Goes from top to bottom to top to bottom. And then find out where it's going from there. Top's here, bottom's here. Now she's going to the upside. All right, so nice invitation. What does the number look like? 143.50. The 144 is going for 160. That's two stocks I just showed you that are both over 1% for 2 days. Gallant, that's a nice picks there, buddy. Jen, how are you? Jen, I want to chat with you. I'm going to send you an invite. If you want to. You don't have to. I don't want to put you on the spot or anything. All right, so that's Dell. A, B. Let's go and actually take some of these stocks off the list we got. A, B is going to be a no. I don't know who came up with that one. Whirlpool, WHR. WHR. Whirlpool, real quickly. 102.49 to 103s. No, not for this week, but maybe for next week. Let me see if I can find another one. Gallant, do I really need to be here? You can take over. You're finding some good ones so far. Spider, really? SPY? What makes you think I can afford 1,000 shares at 549? I don't do stocks over 250, only because it's a long drop. And I really don't think that spiders pay dividends. Do spiders pay dividends? Let's go find out. Yahoo Finance. Yahoo Finance. Let's find a quote for Yahoo Finance. Is a dividend in addition to your 1% to help you get the 1%? That's a good question. No, it's not. SPY. The dividend is more or less an indicator of when to jump in. Okay, so most stocks that I look at, what is that one? If it is to be PFG, we'll take a gander at it. Okay, let's take a look at the spiders. This is another reason why I don't like spiders. Happy Lou, Macy's, huh? Okay. Spiders is paying 1.28%. Now, you're going to need to explain that to me. Hey, SM Rocky. Bought some Hormel today. Hey, Hollywood. Now, I do have some Hormel. Okay. Abelmal I don't have. That's the only one I actually lost money on this year is Abelmal. Honest question. What is your thoughts of your method versus a proper firm in trading futures for cash flow? Ooh, now that's a nice question there. History, stories, daily facts. I'm going to read it again slowly. What are your thoughts of your method versus a prop firm in trading futures for cash flow? Now, from what I understand, somebody explained to me a prop firm the other day. That's where you trading somebody else's money. That sounds cool. But I like my strategy. It's simple, it's safe, it's predictable, it's consistent. Okay? Now, very simply. All right, yeah, see, let's get back to the spiders. I usually don't do spiders. Okay, historical data. Number one, 1.2% yield. That's not enough for me. Dividends only. So let's take a look at the dividends on the spiders. Okay, so the spiders are paying the dividends, but look at the consistency. And they do have, more than 20 years. But look, here we go, 33, 35, 38, that looks good, 44, then she drops, 35, 36, 40, 52, 40, 41, 37, 35, 47. Yeah, they're all over the place. There's no consistency in the increasing of the dividends. 94 to 114, down to 93, then to 103, then to 121, 108, 135, 110. It's not ever increasing. The yield is horrible, and it does have weekly options. But like I said, it's $500 a share. I don't have. If you think I have that much money, you're sadly mistaken. I don't. When I buy shares, I like to buy, anywhere between 300 to 1,000. Okay, nice amount of round numbers. But $500 and $50, $550 a share, yeah, no. All right. Well, the 550 is going for 549. Yeah, that's absolutely horrible, in my humble opinion. Yeah, $540. I expect to get at least a $5 premium, because $5 is 1% of 500. And look at the premium we're getting, 162. Yeah, the premium's absolutely horrible. The premiums are horrible, the yield is horrible, and the dividends aren't consistently going up. So my opinion on spiders is that's a no. All right. I could give you the what the hell were you thinking when you put in your $500 a share, okay? You're getting less than 2% per year. Why would you invest your money at less than 2% per year? You can put it into, what do you call it? A CD and get, guaranteed money. The Spiders isn't guaranteed, and it's not consistent with their increasing in their dividends. There's no consistency there. Yeah, so I'm going to say no to Spiders. Next on the list is Duke Energy. So, history stories. Hope it answered your question. All right, I know I'm into for too long. Secretariat. All right, I missed some of these questions. ALB. Bought some Hormel today. Way to go. How is your AEO investment going? Jessica, I think I made my 1% off of AEO this week, even though I did sell at a lower premium than my purchase price. Yes, okay, I'm glad that worked out for you. History stories, glad it worked out for you. All right, Secretary, good luck with Hormel, the thing trades by apt, and the calls have horrible liquidity. HRL. Okay. So Hormel, she dropped going sideways, 30.71. The 31. Oh my God, they are horrible. Wow. Don't. I have Hormel also, and it's not working for me either. Fair enough. All right, I'm glad it's fair enough. Prop firms have too many rules. Can't hold overnight. Yeah, I'm not for that at all. I know I'm in it far too long. Okay. Quick question. So we do 10 days before the dividend, correct? But the day of the dividend is over. When do we sell? Oh, so apparently you weren't listening close enough. If I'm looking at a stock, okay, anyone, okay, 10 days before the EX date, Comcast, perfect example. 10 days, okay? 5, 10. So I want this week here. I want to buy it on the 17th. Okay? Comcast, right there. The 3rd of July, which is tomorrow. Okay? I would want to have bought it by the 17th. Now, let's quickly take a look at what that means. CMCSA. Now, first thing I want to do, go to the 17th. Wow, we don't even really need to go to the 17th because look what happened. Opening of the day on the 17th, right here. The opening of the day on the 17th. Here's the 17th. The opening of the day, 37.39. All right? Now, for the dividend capture strategy, we want to take the dividend, which is 31 cents. Add it to the opening of the day, 37.39. Okay, and we come up with 37.50. No, wait, that's not right. 31 and 39 is 37.70. Okay, that's my exit target for the dividend capture strategy. Remember the dividend capture, 10 days prior to the EX date. Okay, on a Monday. Here's Monday. 37.39. Add 31 cents to it. Now we're looking for an exit price of 37.70. All right. First day didn't hit it. Second day, 37.79. 2 days. Now I got the software that I created that actually does that. It goes and looks at the data stream. Let me show you what the data stream is. Okay, watch this. Here's the data stream. Oops. I'm going to go historical prices. Some strange reason she's not filling. Different strategy, don't wait to hold overnight. Yeah, I get that. Question. We buy 10 days before the dividend, but the day of the dividend is all right. When do we sell? We sell as soon as it hits a target. Okay, take a look. Here's the data stream right here. The dates. These are all the dates. July 2, 24, July 1, June 28, June 27, June 26, June 25, June 24, so on and so forth. That is the first column, is the date. Second column, right here. The opening price of the day. The high of the day. Next column, the low of the day. Next column, the close of the day. The adjusted close, and then the volume. So what are we looking for? Okay, we're looking for the dividend date. Okay, right there. Here's the dividend date, right there, the 9th of April. There's the 28 cents. Let's go 10 days prior to. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, here's the opening of the day. I'm going to add the 28 cents to the opening of the day, and that's going to give me 1741. Okay, so we look, very next column, the high of the day, 1741. 2 days. Okay, so you buy it and you're out in 2 days. Different strategy, don't want to hold overnight. Yep, got it. Translation 2, please. All right. Daily facts. Just me hold long prop farms. Too many restrictions on trade. Simone, how are you? Sorry, I meant options. All right. Do you know why Macy's? I have no idea. She said something. Do you know why Macy's is going down? Bad news. I'm curious. Based on what you said on how you buy, what's the value of your portfolio? I'm not quite sure the value of my portfolio has anything to do whether I'm right or wrong, or whether the numbers work or they don't. Okay, Carlita, you asked a question too. These questions go by so quick, I can't get to them all. What number is PBR on the list? Okay, this is the list for today so far. Whoops. PBR is down right about here. Okay, got a ways to go. 10 o'clock, all right. Prop firms, for me, are just brokers that get bigger cut of the earnings. Yep. Charis Mills Code Mirror Strategy. Okay. Found another one, JWN. Ooh, JWN. JWN. All right. If I sell before the X date, I lose the dividend. That's correct. Hi, what about Home Depot and Cisco buying now? Jolly, how's it going? Okay, so Home Depot is always usually a no for a couple of reasons. Reason number one is that the premiums aren't that, well, haven't been that great lately. And reason number two, it's over $250. Okay, $334.95. The 335s are going for $232. Okay, it's a nice number, don't get me wrong, but it's not 1%. Why do you close your option positions on Fridays? Well, Jimmy, sometimes some brokers don't allow the options to expire worthless on Saturday, and you have to buy them back. Some companies allow them to expire worthless. Hey, it's good to see this, good sir. All right, user. 952858. The names would be so much more challenging. All right, so Home Depot, the numbers usually don't work. Okay, 335. The 335 is going for 232. You know, just for the fun of it, what is that? Because I know it's not 1%. Clear. 232 divided by the purchase price, 33 5 roughly. That's like 0.7. Now 0.7% for the week is not that bad. What does that come out for the year if you do 0.7 every week? Yeah, like close to 40, 36%. Okay, 36% is not bad if you think about it. Okay, but I like 1% per week. That's over 50% per year. If I'm going to do it, I might as well get what it is I'm looking for. All right, so let's go to the next on our list, Duke Energy, D-U-K. Duke Energy is a no, it's a monthly. AGNC. 965. The 950s are going for 8. Between 8 and 19. So you probably could get your 1% there. Let's take a look at the chart. Here's the high, here's the low, here's where it was, here's where it is. This is the direction it's going, basically to the left, to the right. All right, the high was 1065. That was the end of July last year. The bottom was the end of October. So from October to where we are now, still to the upside. Last 90 days, which is the last 3 months. Okay, high, low, where was it, where is it, what direction it's going? 5 things right there. High, low, where was it, where is it, and what direction it's going. I like the 5s. 5s are cool. All right, so down, up, down, up, down, up, down, up, down, up, down. Now it's going to the upside. AGNC looks good in that part, in that aspect. Sideways stocks are good, I thought. Keep collecting that premium without hitting your strike. Exactly, Prakaris. So let's look at the last 30 days. Here we go. The last 30 days gives us a better idea of where we think it's going to go in the next, well, until Friday, because that's basically what we're looking at. We want to know from tomorrow morning until Friday, is it worth jumping in to make some kind of a play for this week? Well, with AGNC, here we are over here, 945. She goes up, pulls back, up, pulls back, up, pulls back. Look at here. This is the new 30-day bottom. You have one nice day to the upside. That's a nice day to the upside. Check that out. So you got your invitation right there. And is it giving you your 1%? Well, you could get it, 965, and the 950 is going for 8, between 8 cents and 19 cents. So you probably could get your 1% out of this for the next 2 days. That's Thursday, Wednesday, and Friday. Anyone else buying the juicy Nike dip? Squidward, I already jumped into that. Walgreens hit another 7-year low today. Did it really? Damn it. Walgreens, WBA. Okay. Here's what we thought was the year bottom. Okay, we thought that was the bottom, and it was the bottom. Okay, it went up, pulled back, up, pulled back, up, pulled back, and then this big drop. When this big drop came, I bought a bunch. Okay, but that's not the bottom here. The bottom kept on dropping. And it's going to keep on going until we, the buyers and sellers, saying, hey, this is way too cheap. Would you please explain when you use the tool seasonality on the graph? Chamasexy, we'll get to that. Patience. They're closing a lot of stores. Yep, I did some research on some news the other day, and out of the 8,500 stores Walgreens has, 8,500. Well, they're trimming the fat. They're getting rid of the low producers. Okay, so is it going to work out? We don't know. There's so many companies that have been hit that do recover over the years. You know, 3M got hit. They recovered. ExxonMobil. Remember when the Exxon Valdez crashed? Yeah, that thing took a hit. British Petroleum, that took a hit, but they all recovered. These companies are over 100 years old. Okay, Walgreens is over 100 years old. Yeah, so they're at the all-time low. Okay, are you doing dividend capture with options? Yes, I am, Jeffrey. I've been looking up on Nike. We're going to be looking at Nike pretty soon. Wow, General Motors actually could work if you had cash left. Well, Gallant, let's take a look at GM. I like GM. I don't know, Gallant. Looks a little on the high side to me. 46.95. The 47 is going to 32. Galant, that's not my 1%, dude. Okay, it's 46.95. The closest strike price is going to be the 47. The 47 is on the 32, 35. That's not 1%. And look where it is. Okay, your bottom's here at 26. Now she's at 46. Okay, granted, it's pulling off of that high. So let's take a look at that 30 days. Yeah, sorry, Galant. Take a look. Here's your 30-day bottom right here. Here's your 30-day top, pull back, up, pull back, onto the upside. Now it's kind of stuck between the 30-day bottom and the 30-day top. So which one should it go? It should keep going further up. Should, but it's not giving you 1%. So General Motors, that's going to be a no. Sorry. For 2 days, yeah, I see that. It's not bad for 2 days. But what does next week look like? Okay, next week's 47.68. Yeah, I could see the appeal for doing this week and next week. But you said the seasonality is flat is good. Yeah, it is. Let's take a look at seasonality on General Motors. Yeah, General Motors basically flat for the next couple of weeks. No big, huge moves for General Motors based on history. Walgreens will survive. I'm sure they will. They've been in business for over 100 years. Think about it. The company's been in business for over 100 years. They get 8,500 stores. We're not talking like, 3 or 4 dozen stores. 8,500 stores. Okay, so yeah, you're going to have some low performers. You're going to have some high performers, you're going to have some low performers. So, as a business model, what do? Okay, yeah, if a store is underperforming, if you're losing on a couple of stores, yeah, well, you cut them loose. Sorry, it's just the way it is. JWN was a better one. Okay, let's take a look at JWN. Nordstrom's. Nordstrom's. All right, we're taking a look at Nordstrom's real quick. First thing I want to take a look at, what am I buying it for? $21.62. The closest strike price could be $21.50. $21.50 is going for 20 cents. I'm losing 12 cents right off the top. I'm walking away with 8. Sorry, Galant, this one's not working yet either. Okay? The 22's not enough money there. Now for next week, yeah, but for this week, no. Now we came up across a couple of good ones for this week that do have over 1%. Neo is close above 445. Okay, Neo has always been a no. Snow is a no. I can't see JWN having 20 years increased dividends. Okay, Picaris, that's not what I said. Okay, Galant wanted to take a look at it, so I pulled it up, and this is what it looks like. All right, let's go back to the list. Say Mark, snow. Okay, the numbers just don't work. Julie, will Coles come up anytime soon? Maybe next dividend cycle? Well, let's take a look at Coles. Wow, Julie. Now we've been keeping our eye on Coles for the past couple of weeks because we're looking at the movement. Okay, she goes up, down, up, down, up, down, up, down, up, down, up, down. So where we are right now, okay, 1, 2, 3, 4, 5, 6 days to the downside. Okay, I don't see, or I don't remember. Oh, right here, let's take a look at this one. That's a big one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days to the downside before she turned around. That wasn't the only one I saw. What's the other one? Right here. Check out this one. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 19 days to the downside. for Nordstrom, for Kohl's. So right now, Kohl's is in the middle of a 6-day downturn. So it's not as if it hasn't seen more than 6 days to the downside before she turns around. Oh. Jonathan, please. What do I think of UNG? UNG, I don't think I've ever heard of UNG. U.S. natural gas. All right, well, take a quick look at U.S. natural gas there, Simone. Ready? Here's your bottom over here. End of April. Shoots up. There's your high. Pulls back. Shoots up again. Now look where we are, looking for a bottom. As soon as you find the bottom, if you like this company, fine. But I wait for the bottom to show up. I mean, that's all they do. They go up, they go down. 1640 to 1650s. There's no number there. I'd like to see what the number looks like before I decide, yes or no. Hey, Jonathan, you're asking please to what? I'm not quite sure, Joe. Macy's, yep, thanks. You got it. Siri, hold on. Siri is on the list. Yep, Siri is on the list. So is it Macy's? Okay, so next on the list at the moment is Wells Fargo, WFC. WFC. That's going to be a no. Sorry. Don't get me wrong, I like Wells Fargo. It's on my list, but look at the chart. Okay, 61. The 61 is going for 38. No. Next week, yeah. Okay, look, next week's getting 2%. So why would I do this week's and get a 0.5%? Why don't I just do next week's and get 2%? Okay, 2%. But here's why it's a no. Look at it. Here's last year, 42. The bottom's at 38.50. Shoots all the way up to 62. Pulls back up, down, up. And then she's back up again. Yeah, that's a little too wild for me. Okay, take a gander so we can see the way it looks. Because once you zoom in, okay, the 1 year chart, yeah, it looks okay. 90-day chart, yeah, but the 30-day chart, check it out. Up, down, up, down, up, down, up. Look at that up right there. Let's zoom in really close. 30 days. Now how does it look? It don't look that appetizing anymore, does it? 30 days ago, we were around 60.25. She drops, back up, drop, drop. Look at this. From 56.50 all the way up to 61. Yeah, that baby's going to have profit taking. Great time to buy a put if you do puts, but I don't. Principal Financial Group. Cool beans. Yep, profit taking. It's pretty plain to see. 86. Randall Ray. WF is the worst. Wells Fargo. WF. Okay. EURN. I don't think I've ever heard of EURN. That's a no. Wasn't that quick? Carlito? 2 reasons. Number one, look at this. That big, huge drop. Cool. Look at the 30-day bottom to the 30-day top. Yeah, that's going to be a no. And it's a monthly. So, sorry, dude. EURN is a no. Julie, yes, they're up 8% in the after hours. Cool. All right, so next on the list, Nike. Here we go, Nike. NKE. Now, I saw this drop on Nike the other day, and I jumped on it because it's Nike, okay? A year ago, Nike's at 110, okay? The high of the year was in late December, 123. Big gap down to finish the year off at 107. Okay, last 90 days, check it out, last 3 months. Basically going that horrible word sideways, staying in a channel between 90 and 98 and just traveling, channeling. Let's call it channeling. All right, and then last week, last 30 days, let's check this out. See, here you go, last 30 days. I love the last 30 days because it gives me a good idea of where she's going next. Okay, so from here, up, down, and then drop like a rock. So yeah, when it dropped, I bought a bunch. Why? Well, because I have confidence in Nike. Okay? The best time to buy a stock is when it's down because you're buying low and you're selling high. Randall Ray, you don't look at Bristol Myers Squibb? BMY. We'll take a gander at it. All right, so Nike. What does Nike normally do this time of year? Normally, that's taking too long to load. It usually doesn't take that long. All right, a glitch in the system. PH, Parker Hannifin. $5.10, and it's a monthly. That's going to be a no. Next on the list is going to be, I can't even read my own damn writing. That's sad. CVX. Somebody wanted to look at CVX yesterday. We didn't get to it yesterday, so we're going to look at it today. Lots of background noise. Yep, the fans actually keep the cameras cold so they don't shut off. I usually don't have them on that high. That's a little bit better, a little bit quieter. Stuck socks. All right, so we're looking at what? Parker Hannifin. Yeah, Parker Hannifin's going to be a no for a couple of reasons. Couple of reasons why Parker Hannifin's a no. Number one, it's over 250 bucks. It's 500. Number two, it's a monthly. Okay? Number three, and this is the first time I've ever said it. Okay? This is why Parker Hannifin's a no. 500,000 shares. 500,000. It's like 500,000. That's not a lot of shares being traded in a day. Do you buy shares or options or both? Carlito, I buy shares and I sell options. You gotta get the terminology right, because if you get the terminology wrong, you could be at the wrong end of a deal. All right, 86. Were you able to get 1% on Nike? Actually, I made more than 1% on Nike this week. Were you able to get, yep. All right, thoughts on Apple and Tesla? Okay, Jaron, Tesla's a no. Okay, the reason why Tesla's a no is they don't share their profits. Okay, they don't have dividends. I like companies that pay dividends because when the stock goes down, it's never an if. It's always a when. How do you get in the option deal? Oh, wow, Drew, hold on a second. See, here's Parker Hannifin. Here's the bottom right here at 360. She jumps up to 570. Where is it now? It's at 510. So as the stock goes down, what do you collect if they don't pay dividends? Now, a dividend is your share of the company's profits. I'm at that point in my life where I want to invest my money in companies that share their profits because I want to be able to have, how about EDR? EDR, never heard of EDR. That's going to be a no. All right. Hey, Robert, over on Facebook, how's it going? What stock do we have here? Well, definitely not EDR, because EDR is monthly, and those numbers just don't work. So next on the list is Microsoft, MSFT. No, Microsoft is going to be a no. What about Baba? Ooh, now I know Alibaba doesn't have 20 years of increased dividends, okay, but I do actually have some Alibaba. But the reason why Microsoft is a no, it's at the high of the year, okay? To make money in the stock market, you buy low, sell high, not buy high and wait for higher. Yeah, no, I don't do it that way. Do you have 5 or more positions you had to sit on for more than 12 months to get your profit? Nope. Longest I've ever held anything is 9 months. Micron, dividend stocks with 20 years. Thank you, 86. Yeah. Can I buy stock options on companies that stocks will drop. How do I do this? Why do you want to buy options on companies the stock drops? That makes absolutely no sense whatsoever. Sorry, Drew. All right, next on the list, GM. We looked at it. DUN. DUN. Dundee Mines. Yeah, that's going to be no. MO. Altria. Altria. Ooh, good company. Yeah, can I buy stock options on a company that stocks will drop? How do I do this? Yeah. Trey, GEV. Never heard of GEV. All right, we'll get a look at GEV in a little bit. Right now, let's take a look at Altria. Altria is MO, the Altria Group. 46.05 is the stock price. The 46s are going for 21 for this week. Not really making it. Next week, they're going for 44, just barely 1%. So the numbers are a little tight there. Okay. Dividends, okay. Thanks, Galant, 86. Okay, Hassenpfeffer. I would suggest to cash in and leave 10% for the best peak hunters. Okay, Hassenpfeffer, that works. Wait, I was told the stock option is prediction of the stock's direction that pays well. No, that's not true at all. Okay, a stock option, it gives you the right to buy a stock at a certain price by a certain date. There's no indication whatsoever. How many times can I say it? No indication whatsoever that the stock price is going to go up. Absolutely not. Okay, the option price and the pricing of the option, it's a mathematical equation that will drive you nuts. It's huge. It's called Black-Scholes option pricing method. It's crazy, in my personal opinion. Kurt, peace and love from Huntington, Argentina. Well, Huntingham. Well, alrighty then, Kurt. You have yourself a great day. Drew, I was told stock. Yeah, no, it's not a prediction whatsoever. It's a portion. All right. Let's see if I can explain this a little bit. Okay, so an option, Drew. If I was going to buy the stock at 46.05. Okay, that is the price in which I pay for the stock. That price never changes from the time you buy the stock until the time you sell. What you first pay for it never changes. What does change is the daily value. That's this mess over here. Okay, we create that mess. Okay, we are the buyers and the sellers. We decide when it's too high and we decide when it's too low. Okay, now, if it's currently at 46.05, I could buy the stock at 46.05. That'd be my purchase price. Now, if I want to sell it for what I just paid for it at 46, yeah, someone's going to pay me 21 cents a share. I deduct the 5 cents that I'm losing at the top, so I'm walking away with 16 cents. 16 cents on a $40 stock is not even 0.5%. So that would be a no, and it doesn't give any indication whether or not the stock is going to go up or not. Okay, all it does is it gives you the right, whoever buys the option. There's a huge difference between an option buyer and an option seller. Okay, so this trading strategy here that I'm teaching you is option selling. Because what we're doing, we're selling air, hot air, that's about it. We're selling time. Okay, so let's go back here for a second. If I want to buy a stock, when I do buy my stocks, I buy them on a Monday. Okay, so if I'm looking at all these companies here for the week, because I only look at the week. Okay, I don't look at any of this. That's all irrelevant. I just look at what am I looking at this week? What am I looking at this week? Or what am I looking at this week? Because that's when they pay their dividends. What are you looking at this week? Great. Then I buy it on a Monday. That's where I get the highest value for the option because I have 5 days. Now the option is made up of a whole bunch of different things. One of those things is the stock price itself. Okay, that's one. Another thing on the valuation of an option is the time frame from the date of inception to the expiration. How many days left to expire? Okay. July 5, 24, that option expires this Friday. it has 3 days of value to it. Okay? Next Friday, 12 July, it has 10 days of value. So you're combining 10 days of value with the current stock price, and then they add in the, hold on. Then they add in implied volatility. Is that right? Implied volatility. Okay, that's this crazy number. Let me just get rid of this for a second. Okay. This is just for the option pricing. This is how they figure out the pricing of the option. The value of the stock, the amount of time that's left over, okay, the implied volatility, probabilities of being out of the money. They add that into there. That creates that also. What else do we have in there? All right. And then you also have, along with the pricing model, the delta, the gamma, the theta, and the vega. So you have all these components that make up the valuation of the option, and they call it the Black-Scholes option pricing. Okay, and it's a huge mathematical equation. Doesn't mean squat for what we're doing. Okay, what I look for, and this is the, and I want to keep this as simple as possible, is what can I buy it for? 46.05. All right, great. What can I sell it for? Well, I can sell it for 46. Okay, and that's going to give me 21 cents. Well, 21 cents is not 1%, so why would I do it? Okay, now we can look at something else. Take a look at Macy's, because Macy's always pays a nice premium. Check a look. 1803. Great. If I buy it at 1803, I can sell it at 18. Now I'm getting 17 to 22, which is about 1%. If I go out 2 weeks, I'm getting over 2%. Well, I'd go for the 2%. All right, because if I'm buying at 1803 and I sell it at 18, I'm getting 41 cents per share. Doesn't sound like much, but it's per share. Okay, you're losing 3 off the top, you take it off of there, so I'm walking away with 65 cents. Sorry, 3 off the top here, so I'm walking with 37 cents, which is 2% of 18. Okay, so I'm looking for a safe, predictable, consistent 1% per week. Well, this is Macy's. The numbers work. Look, this is what I'm buying it for. If I'm buying it for 18 and I'm selling it for 18, well, what I'm making on it is the premium. I'm just selling somebody the rights to buy it from me for the same price I just paid for it. That's basically all I'm doing. All right, and if the numbers work, great. I'll take a look at the chart. What is the chart telling me? Well, we're on Macy's, and we might as well finish looking at Macy's. Look at Macy's. Here's the high, here's the low, here's where it was, here's where it is, and that's the direction it's going. It's going to the upside. Okay, great. Macy's has been in business for over 100 years. I really don't think they're going anywhere. Let's continue. Was that VTRX? Okay, VTRX has no dividends. DG, Dollar General. All right, DG down. All right, next on my list, T-Mobile. Ooh, this is on Warren Buffett's list. T-Mobile's going to be a no. I'm not even looking at the numbers. This is the reason why it's a no. Okay? Up, pull back, up. Yeah, she may challenge it. Look, there it is right there. Here you are. You're only like $3 away. You really want to take that chance? I don't. Look at all this potential profit taking. So people who bought it down here at 164 are looking at, hey, it's at 180. Should I take my profits now? It's too much of a risk for me. Okay, I like simple, predictable, consistent, and I don't like risk. All right, that's T-Mobile. Ooh, now we jump onto Comcast. All right, Drew. Trey, you want to look at Cintas? Cintas. Well, I'll take a look at it. Right now, we're going to look at Comcast. CMCSA. Now, Comcast has its dividend tomorrow. Yeah, and that's going to be a no. Yeah, look at the last few months. Look at how predictable that is. Look. Up, down, up, down, up, down, up, down, up. Now it's coming to the downside. That's a big fat no to me for Comcast, and it has its dividend tomorrow. Dividends usually cause the stocks to go down. Okay, so the dividend tomorrow, and she's in a 2-day downturn. 38.20, the 39 is going for 2 cents. Yeah, that ain't worth it. WBA we looked at. Mickey D's. MCD. Princess, wow, what a history. I predict it will go down. All right, Drew. How many times do you trade a day? I don't. I heard VWOB pays 6% per month. Can you check that out? Oh, Carlita, really? WOB. A Vanguard ETF. Yeah, that's a no. Okay? Monthly numbers just don't work. 62.65. Okay, the 63s, the number's not even posting. But even if you get it at this money right here at 65, that's a little over 1%. Then I got to divide it by 3 because I've been holding it for 3 weeks. And then I got to figure out where's the stock going to be the next 3 weeks. Well, how the hell am I supposed to know? I have a challenging enough time. Well, that one's pretty easy to see. Okay, up, down, up, down, up, down, up, down. Now she's going to the upside. Okay, that's easy. But the numbers just don't work. Okay, the 65 is going for almost, that can't be right. Yeah, those numbers aren't right. But I don't do monthlies because the numbers just never work. Time. PWR. Who the heck is PWR? PWR. Qantas. That's going to be a no. That's a no. Sorry, Trey. PWR. It's a monthly. Monthly numbers just don't work. You can only do it 12 times a year. So here's a simple question for you. Do I want 12 checks a year, one per month? Or do I want 52 checks per year, one every week? Now, I'm averaging 1% per week. Monthlies, I don't average 2% per month. The numbers just don't work. Evening, hope all is well. Yes, it is. All's well that ends well. Okay, thanks. I'll do that. Writing covered calls. Oh, I guess is opposite direction profitable. I'm not quite sure what we're saying. Brian Robinson. Oh, Robertson? Brian Robertson. How are you? Look at that. Robert Weinkelt is watching, and Bob Robertson is watching. Cool, on Facebook. Cool beans. Carlita, we just looked at VWOB. That's a no. Sorry, dude. Peak Hunters Unite. That's interesting. You can check on Yahoo Finances. Okay. I'll do more research and I'll come back. All right, Drew. There you go. Wait, can you check the dividend on that? Yep. Is there much lag time when you offer your options and when it sells? I'm going to say it depends if you do a market order or a limit order. A market order is supposed to be instantaneous. Okay, you just you put the market order in, you hit enter, instantaneously you should get that order filled because it's at whatever the market is. That's the market maker's job, to fill shares orders as they come in. Now a limit order, he can pick and choose when he wants to fill them, if at all. Big Doggy Dog, IEP Carl Icahn. IEP, really? IEP. Interesting. 16. All right, that's going to be a no. The numbers are horrible. Take a look. If I could buy it at 16.61, the closest strike price is going to be the 17 or the 16.50. The 16.50 is going for 10 cents. You're losing 11 right off the top. Yeah, you're losing money in this one. Okay, the next one out, the 17s. Yeah, that's not making money either. 2 weeks out, The 17 says 0 to 25. You may or may not get your 1% out of that. Okay? Take a look at the chart. Okay, the high of the year, 36. She drops all the way down to 16. She loses over 50% valuation in less than 6 months. Okay, from 36 down to 16. That's more than a 50% decrease in value. So I thought Paul Icahn was supposed to be this big magical trader. Well, if he is, why does his stock get cut 50% in 6 months? And then from there, you're channeling to the side. All right, so the high of the year, 36. The bottom of the year, 14. Is that right? 15. Okay, that was end of December. Okay. Now I have a high in the end of February at 22.59. The last 90 days, which was 4.2 right there. All right, this is the last 90 days, or the last 3 months. Okay, your high, your low, where was it, where is it, that kind of stuff. Look, up, down, up, down, up, down, up, down, up. Now she's going to the downside. Okay, so I don't really see it with Mr. Paul. Okay, last 30 days, check it out. Up, down, up. Now she's coming down, but she's coming down really slow. So that's a no for IEP. HIMS, right? HIMS. I'll write that one down. HIMS. All right, big doggy dog. Big doggy dog. I can 20% dividends. Okay, hold on a second. Hold that thought. IEP. Okay, so somebody just doesn't want this. Somebody doesn't want this IEP to go silently into the night. Okay, so let's look at dividends for IEP. Wow, I got a slow internet connection, which is kind of weird because the box is like 6 feet away. Oh, come on. I don't like IEP. I don't even know why I'm wasting my time looking at this. Just waiting for the data to fill. All right, well, here it is right here. Dividends only. $19.88, 89, 90, 91, 92, 93, 90. Whoa, whoa. Hold the phone. Hold the phone. 1993. So no dividends for 94, 95, 96, 97, 98, 99, 2000, 2001, 2003, 2004, 2005. 10, 11, 12 years of no dividends at all? Okay, then in 05 started picking up dividends for 10 cents. Okay, 10, 15, 24. Now that doesn't make sense at all. Take a look at that. 24 cents a share, and 11. Then it went to 49 cents a share. Then it dropped down to 10 cents a share. Then it jumped up to $1, $1.25, $1.50, $1.50, $1.75, $2. Then it cuts the dividend in half. I'm going to say hell no. Okay, I don't care who he is. Okay, he can't consistently increase the dividends, that means his company's not consistently profitable. So why would I invest money into Mr. Icon? And his yield, what is his yield? Hold on a second. Wow. A 24% yield. That's cool. But if he has a 24% yield, why is the stock price and why is the dividend price going backwards? Instead of increasing, why is it decreasing? It's an interesting question, don't you think? Statistics. Okay, it's a $16 stock. Okay, the book value is $8.22. Okay, so it's not outrageous. Okay, so it's not an outrageous amount of money. You know, so it's a $16 stock and the book value is $8.22. All right, not bad. But you get a $4 dividend on a $16 stock. Okay. Interesting. I still like my 52% better, but it is what it is. Eat cake! Hims doesn't pay a dividend, so Hims is off the list. Hims is off the list. All right, next on our list is going to be Dow, D-O-W. D-O-W. Interesting. Now Dow is on my list, but let's see what the numbers look like. 52.71. The next one, 52.75. So 53, 12. Nope, 53, 12. And no. Sorry. I mean, don't get me wrong. If you like the Dow, fine. But look what she's doing in the last couple of days, last couple of weeks. Okay, here's your top, drop, up, drop, up, drop. Okay, we have a 30-day bottom today, so I'd wait to see the bottom until. Can you briefly explain your strategy? I have been following you for a while. Flementator, 87. I want to know your basic strategy. Oh, simple. I haven't done this yet. You ready? Let's go through the whole spiel for those of you that are new here. First off, my name's James from Dividend Stock Talk, brought to you by the 10-minute trader, meaning this trading strategy should only take you 10 minutes a day. All right, now, 10 minutes a day, I'm looking for a safe, predictable, consistent 1%. How did I come up with the strategy? Well, in 2008, my daughter is 9 years old. She came up to me and said, Daddy, can you teach me what you're doing? So here's the challenge when you're trying to teach a 9-year-old how to invest in the stock market. She's not a Mensa student, and I'm sure some of you know what that means. So it had to be simple, safe, predictable, consistent, and no way she could lose. I had to come up with 5 criteria to make this trading strategy work for a 9-year-old little girl. So here's the 5 rules. Rule number 1, never buy something you do not want to hold on to. Make sure you know what the company does. Make sure you know what the numbers are. Make sure you know this is a good place for your investment. I don't do anything unless I am 100% sure it's a good company. Okay? And you will see, as the longer you follow me, you see the stocks that I buy for myself. They're like name brands, like everybody knows them. Nothing strange, nothing you've never heard of. So, rule number 1, never buy something you don't want to hold long term. Longest I've ever held anything. I've been trading for over 20 years. Longest I've ever held anything is 9 months. Hakuna Matata, how are you today? NNE, we'll take a look at NNE. NNE, there we go. Rule number 2, never sell at a loss. It kind of defeats the purpose of what we're doing. Never sell at a loss. Rule number 3, make sure the company has make sure the company has 20 years or more of increased dividends. This is why I say I only pick good companies. 20 years of increased dividends means the company is consistently profitable. Okay? Consistently profitable, because a dividend is nothing more than we are the buyers and sellers, we are the shareholders, our portion of the company's profits. So if the company is consistently profitable, well, they're going to consistently increase their dividends to their shareholders. That's my number one criteria. 20 years or more of increased dividends, because that way I know the company's doing something right. Now, just to let you know, there's 9,567 companies we checked the other day. That's how many companies there are every day that we can invest in. Okay? But two criteria wipes out 97% of all other stocks. 20 years of increased dividends and weekly options. You just went from 9,567 down to less than 300 decent companies. You want to know who they are? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That 5 list right there will give you over 300 excellent companies to choose from. Great. Okay, so never buy something you don't want to hold long term. Never sell at a loss. 20 years of increased dividends. Weekly options. Number 5, make sure the numbers work. What does that mean? Make sure the numbers work. If I'm buying it for 52.57, I would like to get a 1% premium, which means I'm buying it at this price here. I'm selling a call option against it. It's called a covered call or a buy right, whatever it calls. When you're buying the stock, you're selling somebody else the option to buy it from you for the same price you just paid for it. So if I'm buying it at $52.75, I'm going to sell it at 53. I'll collect 12 cents. That 12 cents is called a premium. Now, for the next 3 days, that's a horrible premium. Okay, so for next week, it's less than 1%. Still don't like it, but if I'm getting 1% per week, that is over 50% per year. Yes, Hakuna Matata. Simple, safe, consistent, and predictable. I want to know your basic. Okay, that's the basic strategy. Okay, I buy it. Hold on. I go through a list of all the stocks in the stock market, over 9,500. Okay, I find out which companies have 20 years or more of increased dividends. Find out which companies have 2 weeks or more of weekly options, and then I put them in a calendar to the date in which they pay their dividend. You got 300 companies in a 90-day time frame. 90-day time frame, that is per quarter. There's 4 quarters in the year: January, February, March, first quarter; April, May, June, second quarter; July, August, September, third quarter. We are currently in the first week of the third quarter. Then October, November, December is the fourth quarter. I look at the list. This list repeats itself every 90 days. Okay, so you have 300 companies, 90 days. There's only 66 trading days. So every week, I'm looking at between 3 and maybe 20 different companies. They're all good companies, and I have no problem buying any one of them because they've already met my criteria. Once they make it to my calendar, it's not as if do I like the company or not? Well, yeah, I like the company. The only thing I need to look for, okay, once they make it to my calendar, great. I no longer have to think about, is it a good company or not? That's never a thought. Remember what Forrest Gump said? Oh, good, one less thing to worry about. Right, if it's on my list, that means I have no longer need to decide whether I like the company or not. I don't. What I have to worry about is, what can I buy it for? What can I sell it for? Does it meet my 1% criteria for the week? If it does, great. Then I look at the chart. What is the chart telling me? Well, here it's telling me, here's the high, here's the bottom. In this particular instance, I like Dow. However, Dow is at a 30-day bottom at this moment in time. Does that mean it's a no? That means it's not right now, because I want to look at it again tomorrow. I like 2 days to the upside. So once it makes a bottom, I like 2 days to the upside Hey, see this right here? Here's the bottom right here. 2 days to the upside, 1, 2. Then I'd be jumping in on the third day. Okay, then I take that right up and looking for that 1%. Buy it for a certain price. Okay, if I buy it for the 52.75, I want to get it for 53. I want to sell it for 53. Yeah, I make a little bit, a quarter between the difference, purchase price and the strike price. Yeah, fine, but I want to make my 1% from the option. I don't care about the stock going up. I just want to know that it is going to go up. How do I know that? Well, here's the 30-day bottom here, 3 days to the upside. That's my indicator to jump in. Great. So it's a simple strategy. Number one, never buy something you don't want to hold long term. Never sell at a loss. 20 years of increased dividends, weekly options, and then make sure the numbers work. The numbers being, what am I buying it for? What am I selling it for? Is that 1%? Great. Look at the chart. What's the high? What's the low? Where is it about to go? And then I want to look at the seasonality. What does it normally do this time of year? Normally this time of year, Dow. Okay, check it out. Here's where we are now. She's going to dip a little bit more to the middle of July, and then she's going to shoot on up to the end of October. August. That's the basic strategy. I hope it was simple enough. And never buy something you don't want to hold long term. That's rule number one. Alrighty. Never sell options at a loss. Okay, I didn't say that, Nico, but okay. Anyone here know how to find a calendar on the website versus on Thinkorswim? All right, inspire me. To find a dividend calendar, it's simple. Go to Google or Bing or whatever search engine you use. Put in the search engine EX Dividend Calendar, and a whole bunch of websites will pop up showing you EX Dividend calendars. All right. Do you do ODT options? Expiration. 0 date expirations? Not necessarily, Raul. It all depends on what the numbers look like. It always, for me, comes down to the numbers. Numbers don't lie. 1 + 1 is going to be 2 no matter what language you're talking, no matter what planet you're talking. Get some more of these questions. Whoops. Okay, probable until BlackRock decides to take it under. Okay. Never sell options at a loss. Okay. Fleminator, thanks a ton, James. It's great to understand your basic principles. Eager to learn more. Well, you're new here, so my suggestion before you do anything, just keep coming back and then ask yourself a very important question. Does it make sense? Can you do it? Well, that's 2 questions. Does it make sense? Where's the high? Where's the low? Where will it go? Well, you're right, brother. I'll add that to my manual. I'm kind of curious what this manual is going to look like. And do I get a cut of this manual you're putting together? It would be kind of nice. What happens if you don't sell a call option before expiration? Devin, that's an interesting question. Now, here we go. Here's the stock price. Here's the option prices. Now, once I buy the stock and I own the stock, that price never changes. That's the price I own it for. Now, the valuation throughout the day, throughout the week, throughout the month will change consistently. But will never change is what I actually pay for it when I decide to jump on the merry-go-round. Okay? Why do I call it a merry-go-round? Well, because it goes up and down, up and down, up and down. It's like an endless circle. Merry-go-round, an endless circle. So wherever you jump in, 52.75, I sell off the 53s, great. Now, when you sell off the 53s, you have a couple of choices on what type of order you place. Let me quickly show you. Okay, here's your typical trigger trade, okay? Buying the stock, selling the stock. I want to buy it at the market price to open. What's the market price to open means? Well, at the market price, it means whatever the market maker is buying and selling for, and that will be listed right here, the bid and the ask. Okay, the 53 is going for 12 cents to 16 cents. Okay, 12 cents if I want to sell, 16 if I want to buy. Now we are sellers. Okay, I buy the stock, I sell somebody the rights to buy it from me. Do I care what happens after that? Not really. I'd like it to stay the same or go up. I don't like it when it goes down because I got to hold the stock longer. I'm not against it. I'm just preferably not have to do it. All right, that being said, if I do a market order, it gets filled instantaneously, whatever the market is. Okay? Now, limit order means this is what I want, this is the only thing I'm taking. That may or may not fill. So it depends on the orders you're doing. Okay? And look at all the different types of orders you have. Market, limit, stop, stop, limit, trail stop, trail stop, limit, MOC, market on close, LOC, I forget what that means. Long, I have no idea what LOC means. Somebody might know. It's one of those things. It's probably written down somewhere. So, it's all about the numbers. Okay, and to answer the question, Devin, if you're doing a market order, it fills instantaneously. Limit orders always have a market maker's mood at the time. What if it repeats every 90 days? Then doesn't that mean the dividend shifts 1 week every year? No, it doesn't mean that at all. Let me give you an example here. See if we can go to a simpler list. Let's take a look at Warren Buffett's list. All right, here's Warren Buffett's list, okay, for June 2024. T-Mobile, Kraft, Bank of America, General Motors, Coca-Cola, Boyd Gaming, Hewlett-Packard, Occidental Petroleum, Paramount, Mendeley's U.S. Bank, American Express, Bristol Myers Squibb, Globe Life. Okay, June 2024. Okay, let's go to June 2023. Bank of America, General Motors, Occidental Petroleum, Kraft, Hewlett-Packard, Boyd, Paramount, Coca-Cola, Mendeley's U.S. Bank. Almost the exact same dates. Okay, 2022. Right? Bank of America, Occidental Petroleum, Hewlett-Packard, Coca-Cola, Paramount, Boyd Gaming, Mendeley's U.S. Bank, American Express, Bristol Myers Squibb, Globe Life. The same stocks, year after year after year. And the dates are pretty accurate. You know, first week of the quarter, second week of the quarter. There's 13 weeks in a quarter. Okay, every quarter. It's 4 quarters in a year, 13 weeks in each quarter. We are currently in week number 1 of the 3rd quarter, or week 27 for the year. Okay, it sounds confusing, but it's really not. You know, well, no, it's July 2nd. Okay, well, July 2nd, it is what it is. Okay, here we are, July 2nd. Okay, what is July 2nd? Well, it's the second day of July, second day of the 7th month. Okay, it is the first week of the second quarter. It is the 27th week of the year. However you want to look at it, it's still the first week of July. Okay, so American Express, Bristol Myers Squibb, Globe Life, first week of July. Next year, first week of July is going to be the exact same stocks. Okay, this is the first week of the quarter. Okay, first week of the quarter. So let's go to the first week of the second quarter. That would be April. Okay, first week of the second quarter. Look at this. Oh, American Express, Bristol Myers Squibb, Globe Life, AbbVie, Verizon, MasterCard, Procter & Gamble, Bank Mellon, Alley, and so on. Okay, let's go to January. First week of the first quarter. American Express, Bristol Myers Squibb, Globe Life, AbbVie, Verizon, MasterCard, Procter & Gamble, Bank Mellon, Wells Fargo, blah, blah, blah. Same things over and over again, every 90 days. So every 90 days, I'm looking at the exact same stocks over and over and over again. Okay? Now, it doesn't change the dividend because you have 4 dates to remember on a dividend. Okay? The announcement date. That's when the company tells you what the dividend is going to be and when they're going to pay it. Okay? So if MasterCard says we're going to pay out $1 dividend, okay, that means they divide it into 4, so it's 25, 25, 25, 25. There's your dollar, $1 per share. That's your profit margin, $1 per share. So that's cut into 4s. So it's 25, 25, 25, 25. That's all $1, okay? So every 90 days, they're giving you 25 cents. That's your share of the profits. Okay, second date is the EX date. And it's these little green dots. Those are the EX dates. Those are the last day the stock trades before the dividend is paid out. So if I want to collect the dividend for Wells Fargo, okay, I have to buy Wells Fargo the 31st, the 17th, the 1st, the 3rd, the 15th, anytime before the 1st of April, it's January, February. So before this date, I have to buy it in order to qualify for the dividend. Okay, 4 dates, remember? Announcement, EX. Third date is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. The 4th date is the payment date. Self-explanatory, that's when the cash comes to your account. All right, so hopefully that explains the dividend dates. All right, that was Dow. Intel. Ooh, somebody want to take a look at Intel. Oh, wow, I got 25 questions. I'm back, LA, Hollywood. Uh-oh. All right. Thoughts on Meta. Meta's a no. They've only just started. Now, don't get me wrong. You know, you may find Meta as being one of those, I don't care what you think of Meta, really. My opinion is Meta has not had dividends for 20 consecutive years. So I probably won't be looking at Meta for another 19 years before it actually makes my list. Mystic Grove, Paramount, huh? Put Paramount on the list. Next on our list is QCOM. Wait a minute, we're looking at Intel. INTC. I like Intel. 3107. Okay, the 3107s, the 31's going 28. Nope, 31's, yeah. Ooh, look at that. Almost 2% for next week. Not quite for this week, but next week looks pretty good. Okay, so what do I want to look at? Now, I like the number for the next 2 weeks. I like that number. That works for me. I want to see what the chart says. 5 things I want to look for. The high, the low, where was it, where is it, and which direction is it going? 5 things I want to look at. All right, so a year ago, Intel was 33.18. Tops out at the end of the year. That's the last couple of days of December, 51.28. Look at this grouping at the bottom. Here we are, all huddled up with our masses at the bottom for the last 3 months. Just kind of like channeling sideways for the last 3 months. The bottom was 29.75 the last 30 days. Here you go, last 30 days, she is in an upward trend, okay? But no real rhyme or reason to it because it's all congested. Up, down, up, down, up, down, up, down, up, down. Okay, now we're into an upward trend. See, here's your 30-day bottom here. Okay, see it? Going to the upside. 30-day bottom here. To the upside. If you like Intel. Okay, so remember that rule number 1, never buy something you don't want to hold long term. I got no problem holding on to long term to Intel. Seasonality. Well, here we are, and you can't really mistake this whatsoever. Here's the seasonality chart. Take a look. The blue line represents the movement for this year. See, January to December. The red line represents 10 years worth of movement. That's 2014, 2015, 16, 17, 18, so on and so forth, for 10 years. This is the area I want to look at right here, okay? And see the dates right here? February, March, April, May, June, July, right here. Look at that. You cannot mistake that for anything else. That's historical performance. Okay, so for the next 3 weeks, this is what Intel usually does. That does not guarantee that's what it's going to do again. That's the average move in the last 10 years. That's the beauty of seasonality, because you take from January 1st to December 31st. Every single trading day gets a number. Okay? What does that number usually, how does it correspond from one day to the next based over the year period? Well, in the last 10 years, this thing's gone up nicely, this time frame. Okay, so I like Intel. I like the numbers. The numbers work for me. Okay, and she's also in an upward trend. So ask yourself a question. Do I like Intel? Do I like Intel at 31? If I'm buying it at 31, this week I could sell that for 25 cents. Not quite 1%, but listen to what you're getting for 1 day, for 2 days. Because you got Wednesday and Friday. There's no trading on Thursday. Okay, so let's clear this out of here. My profit for this week, 31, is going to be 25. We take 7 off of that, because if I'm buying it at 31.07 and selling at 31, I'm losing 7 cents. So I got to take that into consideration. Take that 7 cents off of here. So now I'm walking away with 18 cents per share on a $31 stock. So 18 cents divided by $31, that's 0.6. Okay, what does that come to for the end of the year? If you do 0.6 every week, well, that's still 30%. 30.19, yeah, so 30% per year. That's not that bad if you think about it. But if you don't hit your target, you do it next week. Next week, you're going to get your 1%. So, or you can just skip this week here and go directly to next week, okay, and get almost 2%. But it all comes down to the numbers. Mystic Grove, Paramount. Paramount's on the list. We'll take a look at it. Hassan Pfeffer. If that strategy doesn't work, then you probably have bigger problems. Probably. Any good AIs to invest in? Yeah, I don't do it that way. Your residence. Where's the high? Where's the low? Yep, we got that. Manual. Yeah. Hey, Hollywood. Hassan Pfeffer over here is writing a manual. I'm kind of curious. I'm assuming you're doing it for yourself, or I don't know. Are you turning around and selling it for everyone? Okay, Hassan. 5% of the options get exercised. 15% get traded, and 80 cents expire. Yep, that's probably true. How's it going, brother? Frankie's dad. Dude, I haven't heard from you in a while. I can share my covered call manual to you when it's ready. Well, that sounds cool. QCOM looks great. Does it, Gallant? We'll take a gander at it. Did I miss Siri? No, Jessica, we haven't done Siri yet. Siri is 3 more. Siri is 3rd on the list, because we're almost done with Intel, going through some of these questions. Inspire me. Roughly how far in advance before the EX date do you buy your stock? 2 weeks on a Monday. Can you check out NNE? NNE is on the list. Okay, it's kind of low on the list, but it is on the list. Oh, never mind. Cool shirt, bro. That's a no. Yep, you're right. Holidays are an interruption, though, and there is one. Therein lies opportunity. Next week will be busy. Okay, Hassan Pfeffer, you got that? NNE, have I heard about it? No, we're going to be looking at NNE in a little bit. Share Rome, how are you? Back again. Do you trade on Solana? Nope. Can you look at block? Block. You actually give me a ticker symbol there, dude. I'm still licking my wounds with Walgreens. Pickled peanuts. You and me too, brother. Okay, I like Walgreens. I'm waiting for it to find that bottom so I can dollar cost average down. SQ. What the heck is SQ? Never heard of SQ. Oh, block. There we go. 64. 64, 55, 65. Whoa, interesting. Square. SQ, huh? SQ. Hey, Why Naughty's here. How's it going, Why Naughty? Okay, I want to look at historical data for block. Now, does anybody know if block has 20 years of increased dividends? No dividends at all. Who came up with square? Yeah, no divs. Thanks, foosball. Yeah, block is a no. All right, so let's look at EURN. Somebody wanted to take a look at EURN. EURN. Nope. PBR. Is that peanut butter on rye? Watching Harold Bald. All right, no idea. Watching CAH. Oh, CAH, that's Cardinal Health. All right, CAH. All right, so PBR, peanut butter on rye. All right, take a look at the numbers. Actually, it doesn't look that bad. Okay, she goes up, down, up, down, up, down, up, down, up, down, up, down, up, down. Same thing. Okay, look where we are now. She's going to the upside. More than likely, we have profits coming up on our agenda. I have to go early, sadly. See you tomorrow. See you later, dude. I mean, SQ, that's a no. Sorry, Wade. Yep, SQ's a no. So, Lero, how are you doing? BBY, huh, Joe? We'll take a look at it. BBY. BBY. Walgreens had my car towed. Brothers are suffering. Oh no. Support's hitting. Can you look at VRT? VRT. Okay, so right now we are looking at peanut butter on rye. So first thing I want to see, the 1450s, the 1450s. Ooh, look at this. I can get my 1% this week for 2 days. 2 days. All right, close to it. I can close to 1% for this week. But look at this right here. That's a little concerning to me. So let's zoom in and see what it looks like. Now the numbers work. Great. The numbers work. So what's the chart telling me? I'm about to buy Walgreens. Why naughty? Is JD a buy? JD. We'll take a gander at JD. All right. Why naughty? We looked at Walgreens already this evening. Let's take a look at peanut butter on rye. A year ago, 1401 bottomed out in the middle of July last year, 1304. Shoots the top at the end of February of this year with a double top at 1793. Okay. Last 90 days, last 3 months, check it out. Up, down, here's your high, here's your bottom. And if we're bouncing off that bottom, it looks great here on the 90-day chart, but wait till we zoom in to take a look at the 30-day chart. All right? Now, there's a huge difference between the 90-day, okay, because right there it looks great. DJ, take a look at Apache, APA, huh? Probably not today, but we'll be taking on the list for tomorrow. Jimmy, Pepsi. Pepsi's usually a no because the premiums are terrible. All right, so let's take a quick look. Now, I love the 90-day chart. Look at it. Here's your high, here's your bottom. She's going to the upside. Well, yeah. Okay, she's got a lot of space to run. but let's take a look at the last 30 days. Now that's looking at month by month. I'm not looking at it month by month. I'm looking at the next 30 days. That's what I'm looking for, the next week or two. Okay, so here's the 30-day high, 30-day bottom. She jumps up, pulls back, jumps up. Yeah, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days to the upside. Okay? This thing's probably going to have some pullback. I don't know. Could you look at NDVY? It pays 5% dividend average monthly. Big doggy dog. Really? You keep coming up with these things you say are great, but the numbers just don't work. Okay? NDVY. Is that right? NDVY. Okay. Can't find that symbol. NDVY. Yeah, dude, sorry. NDVY is not coming up. So, next on my list, here we go. Somebody's been waiting for Siri. Here it is, Siri, S-I-R-I. Ooh, I like that. Do you see that chart? That chart looks nice. However, let's take a look at the numbers first. 311. The threes are going for 11. Yeah, not really making your money there. The threes here going for 18. Yep, you're making your money there. Okay, for next week, not for this week, but for next week. Let's take a look at the numbers. Okay, the last 90 days. Take a look. Last 90 days. Look. Down, up, down, up, down, up. Yeah. Looks like she's going to be pulling back. She's got a 30-day high, so that's going to be a no for me. Okay, that's your 90-day. That's saying one thing, but look what the 30-day is saying something totally different. See that? That's your 30-day. 30 days ago, here's your bottom. Here's your previous 30-day top. Pulls back. 1, 2, 3, 4, 5. 5 days to the upside. That baby's going to pull back tomorrow, more than likely. More than likely. Not definite. KHC has me in a serious pain. Hassan Pfeffer, I don't know why you'd get some KHC. Okay? Now, KHC, the only reason I can think about buying KHC is take a look. Here's your high way back at the end of April. She just keeps on going down, pulls back up, goes down. We have a new 30-day bottom on KHC. Okay, look at this. 31.99. The 32 is going for 14. That's not even, that's a little over 0.5%. Next week's 32 is giving me 1%. Why would I do 1% for 2 weeks? Are you, Guilo Pedota, you are going to like VRT curve, but it is changing as in June. VRT. I'm going to say no to VRT. Let's see if I'm right, and I haven't even looked at it yet. Oh, okay, so I'm not quite sure. All right, so let's take a look. 88.20. So the 88s are going for nice. I could still get 1% on the 88s this week. Interesting. Okay, she goes from the bottom of the year, $23, goes all the way up to 110. Then she pulls back. Now we're sitting at 88. 2 days to the upside after that pullback. Cool. I like the chart. That's nice. For those interested, AA and Dell were good for his week and next week. Thanks, Gallant. All right, so here we go. The last 30 days. Okay, look at that invitation. Do you see it? 30 days ago was the 30-day high. Here's your drop, bounces back, drops again. Here's your 30-day bottom. You can't get any lower than the 30-day bottom. So I like what I'm seeing so far. I like the numbers. This is what I can buy it for. This is what I can sell it for. I can make my 1% this week, 2 days. Okay, next week the numbers look just as good, if not better. So here comes down to an interesting question. Do I like VRT? Well, I've never personally heard of VRT. So let's check out what Yahoo Finance says about their consistency with their dividends. Okay, that's going to be a big fat no. Okay? Not just a no, that's a big fat no. James, do you think the chart on Marvel is too high? Gallant, we'll put Marvel down. We'll take a gander at it. MRVL. Okay, but let's finish up with VRT. Somebody says, I'm going to like it. Yeah, I like the chart. Yeah, I like the numbers. But what I don't like, look at these dividends from 2020 for the last 4 years. Okay? It paid once in 2020, once in 2021, once in 2022, once in 2023. But look at what they're paying. It's an $88 stock, and it's paying 1 cent. 1 cent, 1 cent. Didn't increase it at all. And then from 2022 to 2023, it went up to 3 cents. Now in 2024, it's still at 3 cents. There's no increase, and it's only been just a couple of years. So this is going to be a no because they lack their dividends. Okay, and a 3 cent dividend on an $88 stock, that doesn't really thrill me. DS is a big fat no. You better listen, DS. What is DS? DS. No option. DS is a big fat no. All right, next on the list. PFE. Ooh. Uh-oh. Be right back. My fan just turned off. We'll have none of that silliness. All right, took care of the fan. I'm a joker, why not? Yep, not even a stock. Okay, what do you think of KGC? I can fix that? KGC. It's going to be a no. Here's the reason. Look at where we are. The high's right here. You're in the middle of profit taking. At $8, the $8 is paying not enough. Between $3 and $1.12, those numbers just aren't realistic. 8 here, ooh, 2% right there. So the numbers are nice, but KGC, how often have they increased their dividends? KGC. Okay, KGC is going to be a no. Check it out. 3 cent dividend, 3 cent, 3 cent, no increase whatsoever, ever. Okay? And it only has 4 years or 3 years of dividends. So yeah, that's going to be a no. Yeah. Kinross, never even heard of them. Thank you, and VTR. Yeah, that was a no also. Sorry. Oh, so next on the list, Macy's, coast to coast. Yeah. All right, Macy's. Interesting. 1782. All right, JD. Cube was a no. Well, you looked at the numbers, it's a no. 1780, 1803, the 18s. Okay, I can still get 1% this week. 18s is paying more than 2% next week. Okay, great. Let's take a look at the chart. What is the chart telling me? Well, the chart's telling me here's the high, here's the low, here's where it was, here's where it is. That's the direction it's going, to the upside. Okay, fine. A year ago, 1647, bottomed out a couple of times. Look at that bottom, hit it like 4 or 5 times. I said, look at that. September, October, November. Okay, and that was at 1050. Okay, here's our hot. Ooh. Okay, so from our high right here at 22, here's our bottom. Today, ooh, I like Macy's, but I like Macy's. Take a cold shower, John. Okay, last 30 days. Take a look at Macy's for the last 30 days. Here's our high. She drops, comes back up, drops, comes back up, drops, back up, drops. I want to take a look at Macy's tomorrow and the next day. Okay, whoever just signed in, I don't understand that language at all. Terribly sorry. And I don't know where the translator is, if they even have a translator on this app, because I can't see where this guy's question is. Does anybody understand that language at all? Because I sure don't. Macy has an issue with real estate. Probably do, because do they own the real estate, or are they just renting or leasing it? Okay, because they have a big, huge Macy's here in Sarasota. Okay, so I really don't know. But I like Macy's, because Macy's has been very generous to me all year long. Holy cow, it's 11:30. That's what it means. Okay, so let's take a look at the seasonality for Macy's. What does Macy's usually do this time of year? Yep, you know they lease. Yeah, so they don't own the land. So everybody who leases property is susceptible to this BS that the interest rates has us going. Acuna, I had a question, but I totally forgot it. I think it has to do with puzzle to my manual. Okay. Happy 4th. Exactly. So this is what seasonality looks like for Macy's. Okay, this is what it looks like for the year. It has a tendency to be going to the downside. But right here where we are now, she's going to dip and then rebound in July. So we're taking a look right here. Shoot to the upside. Okay, so she's going to pull back a little, and then she's going to shoot on up in the middle of the end of July. Okay, so 11:30, you guys have a great night, and we will catch you again tomorrow. This is James